How's it going, everyone? Today we're going to be looking at SoFi's Q2 earnings results. The stock is trading up 7.2% after an absolute home run for earnings today. And we can see here their membership grew 34% year over year. They added 846,000 new members here in Q2 of 2025. Their overall membership increased to 11.7 million members. Products also increased 34% year over year. So you're getting more products offered to those members. And we can see the impact here on revenue. Revenue grew 44% year over year, as well as adjusted EBITDA almost doubled year over year. In Q2 of 2024, it was $138 million. And now here in Q2 of 2025, it was $249 million in adjusted EBITDA. And the margin also expanded from 26% to 29%. Adjusted net income was $97 million compared to Q2 of 2024. It was $17 million. The margin also expanded from 9% to 11% here in Q2 of 2025. So we're seeing some margin expansion. At the same time, we're seeing massive revenue growth, which is a very impressive accomplishment. Adjusted net income, you can see tech platform and financial services was $472 million in overall revenue, which was 74% year-over-year growth. Fee-based revenue also increased. It was 72% year-over-year growth. And you can see the revenue mix here on the right. You're now seeing fee-based revenue make up 44% of overall revenue, an increase from 37% in 2024. So it's very good that they're diversifying their overall revenue sources. And you can see the highlight here, revenue has shifted towards more capital light, fee-based revenue, which is very important. And honestly, it's very important for a company that's a bank because it takes away some of that risk involved with holding a lot of loans on your balance sheets. And we'll take a look at those delinquency rates as well to understand, what are the potential risk involved with the loans they have. Adjusted earnings per share, you can see was 8 cents, an increase of 7 cents from Q2 2024 to Q2 2025 for the same quarter. Tangible book value was $1 billion increase year over year. They now have $5.2 billion in book value. So very impressive stuff. You can see the 2025 guidance, they're expecting to add $640 million in overall book value. So very impressive stuff. We're going to go ahead and scroll down to the guidance. The guidance was extremely impressive. And we'll take a look at this guidance here. This was the real home run. It's why the stock is trading so much higher today. They updated their fiscal year 2025 guidance. They're now expecting 30% implied annual revenue growth compared to the previous guidance of 24 to 27%. Adjusted EBITDA, they're expecting $960 million, and the previous guidance was $875 to $895 million. So that's a very impressive improvement there. Net income, they're expecting $370 million. Previous guidance was $320 to $330. And they're expecting an applied net income margin of 11%, which is an increase from 9%. Diluted earnings per share, they're looking at 31 cents for the year of 2025 compared to the previous 27 to 28 cents guidance given. So very impressive numbers. You can see on the right here, membership growth of at least 3 million or approximately 30% from 2024 levels. And these are the business segment expectations. Incremental net income margin of approximately 20% when excluding non-recurring income tax benefits, and net gains related to the exchange of our 2026 convertible notes. Lending adjusted net revenue growth of low double digits to teens. Financial services adjusted net revenue growth of 60 to 65%. Tech platform adjusted net revenue growth of low double digits to teens. Loan growth of single digit billion. So very impressive increases for that. And you can see with the segment financials, you can see that total originations increased over $1 billion from Q1 to Q2 2025. And there's a substantial increase in personal loan originations, which was up over $1 billion. Home loan originations also increased a good amount, up over almost $300 million, a little bit under $300 million. So very impressive stuff there. The contribution to profit was somewhat minimal. You can see it only increased quarter over quarter. It looks like about $6 million. So not a huge contribution to profit, but what did drive an increase in profit overall was the financial services segment. You can see that the contribution to profit increased almost, it was $40 million increase in profit from financial services. And you can see the net revenue increased almost $60 million quarter over quarter from an expansion in financial services. So that is a very impressive feat here. And you can see that this company is trying to diversify itself to not just be dependent on its lending segment, and it's focusing more on being like that standard fintech play. The same reason why a lot of investors are happy with Robinhood's growth right now, and they're looking to focus more on being a financial services company. So that is great news for SoFi investors. You want to see them be diversified overall. It gives you a little bit more of a safety net with investing in this company. But also a big deal here was that 90-day delinquencies, you have to understand the risk involved there. Are they giving, loans out to people who shouldn't be qualifying for them? We can see here 90-day delinquency percentage on personal loans actually decreased from 0.46% in Q1 2025 down to 0.42% in Q2 2025. That's a very good sign. You can see student loan, the 90-day delinquency percentage was flat, still around 0.13%. So it's interesting to see the 90-day delinquency is still a very important thing to look at with a financial company. Are they having a lot of delinquencies with loans they've given out? But typically, SoFi only gives out loans to very high FICO score customers. Now, in terms of valuation, you're looking at a PE of around 49 currently. So it's pretty stretched valuation wise, but you are getting huge growth with this company. And so you can very much justify a higher PE with the company growing at the rate they are. Is it a buy at the current PE? I can't tell you that. Maybe wait for a pullback, but also with the amount of growth this company is demonstrating they're capable of, honestly, it may be time just to buy this thing and hold it long term, which is what I did with my own portfolio. I put my money where my mouth is. I'm not just speaking a bunch of nonsense. I purchased SoFi at an average cost of $13.75. I bought it back when it was a little bit lower before this huge rally, and I'm up 63%. From when I bought it. I have about $9,000 in my SoFi position. So this is becoming more of a pretty substantial part of my portfolio. I'm very happy to hold this stock long term, especially with this increased guidance for fiscal year 2025. I think that this is an extremely impressive demonstration of growth this company has accomplished. And last thing I'll mention is Anthony Noto, the CEO. He has a Ranger tab. He went to Ranger school. He was in the U.S. Army. He was an officer, and he's got a Ranger tab. So how many CEOs do you know that you're investing in stocks of that have Ranger tabs? So I think that's pretty cool. Now, I will say a little bit of shout out to my own channel. I covered Q1 2025 earnings. I called this stock 2 months ago. I said it was a great stock to buy. I purchased it around that time because I realized the potential growth with this company. I've been covering it since. I've made multiple videos on SoFi, and I will continue to make many more videos on SoFi. I really love the stock. And so if you got value from the video, consider subscribing to my channel. I'll keep you updated on all the SoFi news you need to know. And I'm going to continue holding the stock because I'm very happy with the overall results. Let me know your thoughts down in the comments. If you got value from the video, consider subscribing, and y'all have a good one.